Okay, quick Thursday morning radar update. So, good session last night in the end of day screening session. If anyone has any subjects along the same lines, I know everything's kind of covered in the website, but if you've got a subject for the end of day sessions, especially on those when the market's been a little bit wobbly and there's not much to look at for us, or the occasional quiet session, drop it in the members help channel. I think that's the best way of me not losing it. Or even in the daily radars channel. I've already confused things, haven't I? Drop it in the members help channel, and basically, it gives some subjects for me to cover, and it also gives me a chance to find out where the relevant information is in the website sometimes. So, moving on from that, I'll just say that again. If anyone likes what we do here, I do this for the members every day. It's usually a private video, but I've been sharing it public. Every day we try and do a little bit of off-piste and do something interesting. We do an hour every night. Simple process of turning up and, not forcing ideas on the market, letting the market come to us, is, basically process-driven, way of doing things. And over time, that's where the results come from. Here's a little scenario. I trade very, there's thousands of hours into what I do, of research and just study and results and, just getting the history. And these thousands of hours are condensed down into a very simple process. I can do my process in 15-20 minutes a day. That is it, So you've got to learn a methodology to simplify it. And the way it works is, methodology makes money. It's riding trends in stocks, adding to winners, cutting losers, just very simple stuff. And obviously the fundamentals I trade towards, very simple. It's amazing how someone can make a report look like they're trying to plait spaghetti. I trade growth. Let's measure growth against all the other growth stocks, and this is what I like to sort of trade towards. What's the best? And it's an extremely complex and researched methodology, what's condensed down into a really easy process. And the aim is to just try and find one good idea every day or so. And obviously you could never trade one good idea every day or so, or else you'd end up with too many trades, but too many investments. But really simple process, repeated. Now, this is how the newer, greener sort of investor trader comes to the markets. They see that one outlying stock, that one what really shot off, and they just go on that grail hunt, trying to curve fit how to catch that one big winner. And the way it actually works is you trade something what makes you money, and every so often that one winner comes to you what really moves the account to the next level. You do not come to the markets and find that big winner every week, every month. It doesn't work like that. There is no way of curve fitting that huge outlying trade. The way you catch it is by trading a very simple methodology, and obviously not, selling out to your winners. To catch the big winner, you've got to do the opposite, build into your winners. So that's how those big trades come on any time frame. The multi-R winning trade, what moves your portfolio to the next level. So very simple process, repeated daily. High five to Nick Raj for just making me talk about that today, because he's just tweeted, and it's makes it is the holy grail is just to turn up every day and repeat the process what makes the money. And if you don't sort of if you turn up too many times in a day, you're probably going to micromanage that as well. So you've got to just do what makes money, bomb-proof risk management, and repeat the process, and the good times will come to you. So, what have we got today? It's a little bit comedy, that the comedy sort of situation in the US, and market was 1.6% off highs, and everyone shouted bear market, and it was just one of those thin days in small cap stocks in the UK where everything had a widespread, and twitchy investors sell down a bit, so things get knocked a little bit, and that's all we've got. And yes, so far, that's all we've got. Nobody knows where the market is going. Very normal action. It is what it is. If you cannot get through some normal sort of back and fill action, you're never gonna. This is what we call the time frame spiral. You're a long-term investor until one bad day in the market, or you're a trend follower until one bad day in the market, or you're a swing trader, and one bad day knocks you out of all your swing positions, and then the market just goes back to doing what it's doing. Sometimes you get 2, 3, 4, 5 bad days. You've got to have some kind of threshold, what doesn't affect you on the short-term time frame, to keep you in for your longer-term time frame. But the threshold's got to take you out of the market when the long-term time frame gets destroyed. That's and you've got to really know what's short-term and long-term for your own time frame as well. Mine: primary trend, secondary trend, swings. Primary trend following growth stocks, secondary trend, swings. So at the moment, the portfolio is less than 0.5% off all-time highs in the history of the world. A little tick up in one stock will put us through all-time highs again. Can someone just give JLP a nudge? That would be fine. Moving on from that, let's just have a look at SDI here, because this is a stock where I've seen people putting their whole portfolio in this, and up in this area. After following this last news day, I've seen so many people heavily weighted in this. So let's just have a talk on this. I know some members got on board in the base here, even here. I got on board on this day here. I'm in around sort of the low 70s, and off it went on its journey. I know some members added to the trade as well here. Fantastic, nothing wrong with that either. What could this do? Even if you really believe in the fantastic results, I do. I've got a position. I'll just ride it out. But what would be normal action? Well, say the market took it down, so it's not going down on its own sort of own back. It's actually going down on market distribution. Well, even if it was going to hold trend, it could come into this area, 130. So you've got to. The first thing you've got to do is say, how much is that going to cost me? And you've got to be happy with that, or else you're going to mismanage your trade. So I will tell you now that anyone who's fully invested will puke before it gets there, or they'll go out of the business. If this one works, that they'll be out of the markets. 30%. That's pretty normal. We know that stocks can go into the mid-30s and still hold trend perfectly. Commodity related, they can half in price and hold the primary trend. It's so the waiting game comes in. So in my world, this stock's actually holding the 50-day. It's not. I don't use the 50-day for anything, but I can see it's respecting the 50-day. So, if you were getting involved on this stock, thinking this is an opportunity, I would be sizing for down here. Here's the dilemma. Size for a close below 99. something like that. You know, do not trade on this. Just use it as educational advice and drop it in a spreadsheet like we were doing last night. So, you know, if I was taking a new position in that, I think it respects the 50-day. Well, I'm not going to put a stop here and size for that, am I? That would be insanity. No, you know, I put it there because I know I can add to the trade if it does move back to highs. So, you know, if that wasn't the low and it came into a normal area and then went back to highs, then I could trail to there and add above here. And that will get my weighting up. And it will get my weighting up on something what's moving in my favour. You know, that is the key. You know, that's the key to sort of keeping relative strength in your portfolio. When the market's dumping and something like that happens, you're likely to go, well, I won't take this one because the market's bad. So I think this, you know, and the stock's screaming at you, whoa, you know, here I am. I'm trading all-time highs. You know, I'm going higher, and you don't add to your best stock in that period. So, you know, I tend to add to it. Once I've got the full position I'm happy with, I just ride it out. But I've got a pretty good weighting in this just because of how tight the bracket was. So that is the way to scale in. You can go in with half your position and add the rest so you get your full position, you know, if it does trade, you know, that next leg ups. You know, there's the old thing I always say is no trigger, no trade. You know, if you get no trigger, it's because the stock's falling. It's net. If it doesn't get that trigger, you're not getting paid. You know, you're not getting paid anyway. So you might as well let it, you know, above here, you're wrong. But, you know, if you want to buy a pullback, you buy it there and you're wrong in a sensible place. Give it room to breathe is basically what I'm saying. And to add your weight, you get the chance on a high high. So that's this morning's sort of talk on SDI. You know, I always get nervous when I not about SDI, but just nervous when I see people loading up heavily, you know, half the portfolio in a stock on the back of an earnings report. Now, you know, huge winner in this for everyone who got involved at trading bases. Huge winner. It's not banked yet. It's, you know, I'm not counting chickens here, but at the moment it's a huge open winner. But it's got a huge cushion as well. It can go down it can half in price and will still be a winner is basically what I'm saying. So, you know, in the scenario where you've got a big position in your portfolio and it's all open profit, well, that's a different thing, you know, because you're not going to, if the worst happened and it halved in price and you sold it, well, you're not going to be banking you're not going to be taking a hit on your pot, are you? You know, you're going to just be taking a smaller winner. So, you know, two different, you never want to be trading out of a hole with these things. So that's a little warning on people. You know, stocks will trade like stocks. No matter what that report says, they will go back to trading like stocks. The worst time you can get on the back and get heavy into a stock is actually when the investors all love it, you know, love that report. The market has an unbelievable way of just taking those, you know, the frothy day is an unbelievable way of taking all those players out of the game, and the shares move from the private investor into the institutional investor, and then they go higher. And the institutional money can just keep tapping on the bid on this and just tap it through everyone's sort of pain level where they decide they were wrong, and they can pick those shares up with very little, you know, pressure. They can knock it down and then buy it up again. So, you know, try not to follow the sheep. You know, try to just look at the stocks, how the stocks trade. That is key. Now, this is an extremely long update today, but, you know, I just wanted to state that because I've seen it happen so many times, and I've seen it, you know, Tapika's the classic where all, celebrity sort of social media trader tells everyone how good it is, and then they tell them how good it is again after it goes down on its first gap down, and then the guy doubles up again, and then all of a sudden he's out of the game. So, I don't have the best social media skills, but I do have some integrity in what I do. This can go anywhere. I have absolutely no love for any one stock. So, apart from JLP. Right, moving on. Let's just quickly hit today's large cap volume leaders. See what's in there. It is nearly 10:30. I'll put 29% in. It's on the gas. Lots running in the large caps today, and I'm going to jump straight to the small caps, and I'm going to go 29% again. We're going to see if this is a large cap volume day rather than a small cap volume day. What did I say? 29%. Small caps are on volume 2. Let's have a look at the sectors. Industrial metals, a couple of oilers in there, general mix, and I will buzz through these fast. Eden, no forward numbers on this myself. Quarter on quarter look pretty good, or half on half. Moving return to growth on this one. It's got a tick up as well, 10.8 to 12 point. Not decelerating, but steady. Step cement. Boring sector, obviously construction, but it's doing okay at the moment. Solid state. What I will just solidly state with this stock here is the last update was still a tick down in the forward numbers. So people get frothy and say, they were going to beat negative numbers on the turnover. So, just dig into these results. Don't listen to what people tweet on social media about this is going to beat. Is it going to beat last year's number? Beating guidance isn't that important. It's the old classic, Well, what we've got today, this isn't updated, 67.4. Is it going to beat that on the turnover? Because at the moment, posted was 67.4, forward was 64.2. So that's what you've got to remember. Are we going to beat, or is it still going to be negative on the forward turnover? It's steady on the pre-tax. It's ticking up slightly, decelerating, and the score. Dig into it. Do not just listen to those weird people who go, what we love to hear. My stock's going to beat, this, beat that. Dig into it. There's a little bit more to it than that. Obviously, we looked at this last night. I'm not getting involved, but I've got no cash to get involved. Never trade on the back of someone telling you that a stock's going to beat something, because it's like saying, well, we lost 5-0 last time, but we're going to beat this time. We're going to lose 4-0 instead. We're still losers. That is the I'm going to beat scenario. What you've got to just check. If it was, we traded 5 last time. Well, 5 up last time, compared with 4 up the time before, and we're going to be 7 up this time. That's acceleration in the beat. That's a big difference. That separates the wheat from the chaff. Gear for music. We're going to beat. It's already accelerating on the turnover, this one. It's already accelerating on the pre-tax. It's already accelerating on the earnings per share. I know that half on half was a little bit negative, but it was up on the turnover. Was that we're going to beat? I don't know. I did see it had news on it today, so... You will learn more about digging into those, just getting rid of that nonsense information and doing it yourself. Do not ever trade on the back of someone's opinion. My opinion's got a pretty good record at the moment, but I'll tell you, over the long term, I'm right. Depending on the market period, I'm right about half the time. At the moment, every trade in the portfolio is positive. We've got about 19 or 20 positive trades. One trailed loser, so 1 point something R loser. Not a loser, actually. Yes, a loser. Small loser, just one what I added to, and then it reversed and stopped me out. And we've got 19 or 20 trailed winners. At the moment, talking my own book, I know. But yeah, pretty healthy market. I think we're still going to go sideways myself. Doesn't matter what I think. You know, I'm fully loaded. Yeah, I could probably squeeze a few more trades in on a spread bet account, go on margin, but I've got a few ad points. I've got a little bit of cash for ad points. But yeah, get outside and catch some sun, I would say. Fantastic. Okay.